Here's that 690 put once again on that Priceline trade. That 689.06, they burned the clutch right off that bottom. We had an MMT that had entries there, and then they ripped it right up to the strike price of the 690. Now, yes, we did feature this at $2.70. Yes, I did move this up to 3.2. And this was our pre-market evaluation on Priceline and that rip and roaring video, that apple, and hopefully that gets edited and spliced out, that apple's a special piece on its own. However, the 450 low is that $9 markdown, and like I said in the earlier pre-market, it's about getting that wholesale bid. And that's the wonderful thing about being an MMT. You're not going to be retail to the entry. And if you get hit because you have a wholesale entry, you always have your stop loss is going to be minimal, and you have a way to exit. The dollar cost cash risk is at its very lowest level, capital risk. I call it cash, capital, whatever you want to call it. When you're buying wholesale, if you're buying 10 contracts at $9 and you're buying them at, let's say you bought these at $5, you took out $4,000 of risk in your entry. That's what being a market maker in options is about versus a lot of your other things that people have used over the years, that a lot of them are outdated in my view. Making a market wholesale and understanding how to get that $19.20 close. We just had a print, $12.50 here. We're going to be below the market because, you see, this price doesn't go lower if you don't break those highs. And that is the reversal high on Priceline on this opening bell in the first 15 minutes. On 146,000, 147 volume was climbing right now on the 15-minute bar. So in that 15-minute price action, that's the long position. The short position is 689 down, and you can see your put market was marked down from 1920 to 1130 bid, and you can see that the bids are contracting now. They were $1.80 wide, 1130 by 1215. People say, well, how do I even get involved in there? The market doesn't let you get involved because it's hard to understand the true values and what you're really doing there. Making the market with the public is a different thing. So if I'm buying wholesale, I can offer out over here at $12.50 and I make my dollar spread. By being at that wholesale entry, that puts me over here. And, you know, once again, as Priceline fades back from its price exhaustion high gap, we can see that the contract's printed 1160 right there. They're still marked down wholesale from 1920. And this is where people, but look at the bid and the ask, get much wider. And people don't know how to adapt to this in the option derivative market, making a market. We specialize in that. That's not, you know, day trading books on how to buy and sell options. No, sorry. It's a whole different event. And it's a wonderful one to be involved in because you'll see that the way that we do business and the way that you've probably done it in the past are quite different. It's all good because we want this to be part of your gift too. So join us in getting wholesale bids and then being able to put this out here at $12.90 for $1 profit. Go in front of the ask and make all of these people that are wanting to get $13.30 out of it, and you take your dollar. So you can learn how to control the market on entries and exits using various put strike prices, a special series on how to trade the bid and ask in options on an opening 15-minute bell, and it'll go under that category. And we hope that you've enjoyed it. It's live. It's how to get the entries. It's how to buy here and then get in front of the ask to sell, and you're taking the spread and you're selling back to the public. But you have to understand the stock trend, of course. Now, here is where that $3.50 markdown. See, so your last print's $1 up. Now, when I told MMT, when they got this entry, if they got it down at the lower level, it doesn't matter that they would get $1 profit. There's always $1 profit in there. $4.50 to $5.50 is your dollar. but they're 520 by 6. So you could offer out at 570 and tighten the bid and ask range. So you contract it is what you do. Throw that at 570, that's 550, that's 50-cent bid and ask. Bam, and someone buys it from you. And then you exit. 155 contracts traded on that opening bell. Once again, $9 marking it down to that wholesale entry and selling back to the public using a weekly options expiration example of how prices get marked down to wholesale bids for the SMF MMTs featuring the 690 put with the 689 high on Priceline.